So most people think real estate is just rich people business, but what they don't understand is how money actually moves inside of real estate deals. Today, we'll be breaking down how you actually get approved, get funded, and in position to build wealth through property. Afia Owusu went from Florida State dorms to being involved in over $100 million worth of real estate financing and joint venture projects across the U.S. and Ghana.
Afia, what's good?
Doing good. How you doing?
I'm good. No complaints. So we're going to jump right into it.
Okay.
I want to ask you, what was your first property type and what was the purchase price on it and what was your role in the deal?
Okay. So the first real estate deal I ever did was when I was 18. I was shopping for a place to rent, and then I heard a divorced couple arguing, and then I inquired, and I was like, well, instead of renting the place, I can buy it. I was planning on buying one house at one time, but then they had 4 houses. They were going through a divorce. So I said, well, let me buy all 4 of them. And they were like, really? So I bought 4 houses for my first flip.
Oh, wow.
18 years old at Florida State University. It was more of a cosmetic flip. So 4 of the houses, they were almost move-in ready. So I just did stuff like change the kitchen cabinets, do the carpet. I didn't have too much of a big flip to do. So it was like
cosmetics pretty much.
It was a light cosmetic, getting it spruced up for the new tenants.
How much did you make on that deal?
I cleared $100,000 when I closed. After I bought it, I bought them for $25,000 each.
Wait, say it again.
I bought $100,000 is how much I made on it.
$100,000.
$100,000 at 18 years old.
So on all 4 properties, after you went to the closing table, you cleared the check of
$100,000.
That's a pretty good flip for your first flip.
A very good flip. I wasn't planning on doing it, but I'm spontaneous like that. I enjoyed it.
What did you do when you got that money? Like, what was the first big purchase, or just what was the first purchase when you got that money?
I think I was so conservative, and my parents, being African parents, are very conservative too. So I think I bought a car. I put some money down on a car so I can go travel around Tallahassee and stuff like that. But that was about it. I didn't really splurge or anything like that. I mean,
you reward yourself, you know what I'm saying?
Oh, it's $100,000. Yeah. So I got a car. It was nice.
Let me ask you this. What's a deal that you thought was going to go really well, but then you had a few hiccups, like you probably lost money on it or it just didn't go as well as you thought it was?
Yes. So definitely, I would say a flip that I did in Baltimore City. I thought that I was going to at least make $30,000 to $40,000 after the renovation. That was a full gut.
Right.
So I went it over my head and on a full gut.
How much did you end up losing on that?
About $110,000.
Oh my goodness.
Only because the contractor actually stole a lot of our money. So I was paying him to do some work and he wasn't doing the work. He was pocketing the money. Found out he bought 2 SLAs.
Talk a little bit about that. How can you avoid stuff like that happening?
So the main thing I think that would have helped me avoid that was vetting the contractor.
Right.
Checking his license. Looking at his other projects, talking to some of the people that he's done work with. So if I would have talked to them, they would have told me not to deal with him.
Right.
So I thought it was going to go good. We were at the project most of the time. It was a full gut where we gutted the whole actual building.
Right.
So it was nothing but walls. So that was the first mistake. Going into a full gut, not understanding the market, as in Baltimore where I was. Not understanding what the contractor's responsibility was, not understanding how the licensing went and the inspections went. So that one, I lost my shirt.
And you should want to look into like the contractor's line of work beforehand too, as well.
Keon, I wish I would have done that. I didn't. I got so excited. I saw a property that was like I think they were selling it for like $40,000, $44,000. And I did the comps and saw that the other properties in the areas, when I say comparables mean how much is the other houses selling for around.
The comparisons.
Yeah, to compare my property. So I was thinking that I can sell the property maybe for like $300, $310 at the most. And I bought the property for $40,000. I had to put about maybe $100, $110 in it.
Okay.
So I was thinking I was going to gross the rest.
Right.
I didn't do my job. I didn't vet the contract. So I was paying them.
That's crazy.
And then another thing that everybody needs to do, you need to go to your property every single day. When your contractors are working, don't rely on them to send you pictures and videos. go there every single
To be
day,
hands-on, see what's going on.
hands-on, so they actually know
That
that
makes sense.
she's going to show up.
Right.
She's going to
That
come
keep
back
them on their toes.
and keeps them on the toes. Once they realized that we weren't coming to the property,
It was kind of slack.
we went over there one time. There was alcohol
Oh, no.
bottles, empty alcohol bottles. The electric was done wrong. The architecture was done wrong. And it's stuff that was my fault. I totally take responsibility.
So these are all things that you learned from moving forward.
Moving forward with the flip. When somebody's doing a flip, you have to be hands-on. You have to do your homework and not just look at the outcome that you're going to get.
Mm-hmm.
How are you going to get to that outcome? I'm going to get to it by staying on top of the contractors.
Yeah.
I'm going to get to it by staying on top of the numbers and everything else like that.
Well, I know you're not only into the development phase of real estate, but you also are into the financing and mortgage side. So
Yes.
what would you say in 2026 for first-time home buyers? What are a few options for leasing?
Okay, like lease with the option to buy or to buy?
Yeah, to buy. Leasing with the option to buy.
So,
or just buy for mortgages.
okay. So we have a program where people that are not ready to buy, either because their credit is not up to par or their income is not really there.
Mm-hmm.
So we have a loan that can help them get into the property, sign paperwork as if it's their property, and they lease it for a year. See how they like it. It's a home that they want to keep. You have to make sure that we say that.
Right.
Then we actually do the loan for them. After a year, I can refinance them and the house is theirs. So all the money that they have put into every month payment is going towards the principal.
So they can do a lease option with basically with looking to buy it. Like
That property. Exactly.
Okay.
Yeah. So
Okay.
that's the program that we'll do with the lease with option buy. Now, if you're ready to buy a house right now, credit is good, income is good, assets are good, I can put them into a first-time home buyer program where we help with down payment assistance.
What programs those are? Like what are those? Like
Yes.
two programs. Give me a name of two programs
So it's
that people like us been sleeping on. They don't know about.
okay. So DPA program, down payment assistance program. That helps you actually with the purchase. So when you're buying a house, say it's 300,000,
Mm-hmm.
normal FHA loan, you would have to put 3.5% down. I will give you that money for the 3.5% down within the loan. So you don't have to go through the city. Normally you have like grant program, vacant value program where you have to, or the trolley program where you have to go into the city and you have to buy in a certain zip code to get that program. A lot of people are sleeping on the fact that there's down payment assistance programs and you can buy anywhere in the DMV, Maryland, DC, Virginia, and I can still give you the money for the down payment and I can give you the big portion for the actual house too.
So there's actually benefits for people coming through you opposed to anybody else because of what your knowledge and what you have access to.
Absolutely. So when you work with me, they nickname me the money lady.
The money lady.
Anything money that has to do with real estate, anything that has to do with collateral, I can put a loan on it.
So what's the catch? How come more people don't know about like those two programs you just named?
I think a lot of people listen to family members and friends and they listen to social media and a lot of people are not explaining how it works. And like you said, a lot of people say, what's the catch?
Mm-hmm.
The catch is the lender is going to get paid off of the interest on your loan. They're not doing you a favor. If I lend you $300,000 at 6%, you're paying me for 30 years. Every time you buy a house, you're going to pay interest to the lender for at least 12 years. You're not even touching the principal yet. That's the catch. The lender's making money.
So they're going to make money regardless.
They're going to make money off of the loan. They want you to come. We want you to come to us to get the money. I always tell people, always use other people's money. Always. If you have $100,000 in the bank saved, that's your money. I have clients that have millions of dollars in their account.
Right.
I have a client that just bought a house for $1.4 million. He was going to pay cash for the house until we came to me.
Oh, wow.
And then I talked to him. I said, Dr. Jeffers, that's his name. I said, listen, keep your 1.4 million. Give me half of that. I will do a loan for you and we put half down. What does that do? That lowers your payment. That lowers your tax liability because you're putting half down.
Right.
And that's using half of the bank's money to buy the property. What does that do for you? That allows you to take that other money that you were going to put in that property and go buy other properties.
Right. Invest.
Right.
That's a win-win.
Invest in other properties and then pull money out of those properties. So I have a solution for everything. They have to contact me, tell me your scenario, and then I'll tell you how we can navigate the mortgages because I know mortgages like the back of my hand.
Right.
I'm doing it for 25 years. I know what to tell the underwriter. I know what not to tell them without not lying.
So before somebody applies for a mortgage, what are 3 things that you encourage them to do within the 30 to 60 days before they apply to improve their chances, increase their chances of?
Okay. First of all, know your credit.
Mm-hmm.
Know what your credit score is. I'm not talking about Credit Karma, credit assessing. That's not your credit report.
Right.
Have a lender pull a tri-merge credit report.
Mm-hmm.
Tri-merge credit report is going to tell you the history of your credit from 18 to whatever age you are, right? That's number 1. Number 2, make sure that your utilization on your credit cards are low.
Got it. Yeah.
I see 700 credit scores, 800 credit scores. It's no magic when it comes to that. If your credit card bill, if they give you $3,000, only use 30% of the $3,000, you're guaranteed to have 800 scores. Your utilization has to.
And I've heard even if you have it at about 20% utilization, it's even better.
It's even better.
Yeah.
You're very educated on that. The lower the utilization, it's a trick to it. Some people get credit cards and they don't use them. That's not good.
That's not good.
It hurts your score.
Right. Staying dormant. I just read that recently.
Yep. When it stays dormant, we call it like your credit is sleeping. So if somebody gives you a credit card, and I tell this to my kids, I tell this to anybody that'll listen, get a credit card, start off when you're 18, they're probably going to give you like 2,500.
Right.
They may give you 3,000. They may give you 500. Go to the gas station and swipe the card.
Right.
Soon as you get the card, keep your notifications on your credit card the same way you do on your social media.
Mm-hmm.
They'll tell you your bill is about to be due in a week.
Right.
Get on auto pay so you'll never forget to pay the payment.
Because if you stay dormant like that, they really look at that like it's bad.
It's negative. Think of it this way. If you ask your mom for $100 and she gives you $100 because you want to go buy a certain toy or whatever, and she sees that you keep $100.
Right. Just like,
are you going to go buy the thing or not?
Right.
Scared to buy it?
Yeah.
You don't want to buy it. You think you want to keep all the money? Just take back my $100 then.
Same thing.
That's the way that the credit agency would do. They'll take your line away from you and that will decrease your credit score.
Besides that one thing, what are 2 other things you see people do that get them denied?
Big purchases, like your car payment is $1,500 a month. That's not good because your debt to income ratio will be too high. Co-signing. Please, anybody that's listening, I tell my kids, don't even co-sign for me. As much as you love me as your mom, don't co-sign for me. Because when you co-sign, I am depending upon you to pay their bills on time. Don't co-sign for anybody. And also make sure that you're working 40 hours a week if you have a regular job. Mm-hmm. Or if you have a salary job, just be at that job for at least 2 years. A big mistake that people make. Let's say you're a nurse, right? And you decide to work at Howard Community Hospital. And you leave there and go to another, you decide to change your field altogether. You don't want to be a nurse anymore. Now you want to be a truck driver. It's going to be hard for you to get a loan. We look at 2 years of you job history.
Job experience.
Do you have 2 years of being a nurse? Do you have 2 years of being a truck? Do you have 2 years of being an entrepreneur? So those are the mistakes that people make. Changing jobs too many times, not knowing what your credit score is, and buying high ticket debt. Right.
What would you say, what's the fastest credit move they can make to make them jump? I know you hit a few things, but if they were just trying to jump 50 points or it's just real high, real quick, what's the credit?
I can give you a real life example. I did this for my son.
Okay.
So he had when I pulled his credit, 000, there was no credit score. Mm-hmm. When he turned 18, as he should, because he's starting. I like Kickoff. I like those credit companies, those credit cards that are not, they're fake. They're not real credit cards.
So that's a good Kickoff?
Kickoff is good. I think Credit Karma does one.
I think there's another one called Kickstart. No?
Kickstart. Mm-hmm. Those things are good. Why are they good? Because it forces you to keep the utilization down. They'll give you a credit limit of $3,500. Mm-hmm. You pay them $25 a month. Mm-hmm. Your utilization is on the floor. His score jumped from nothing to like 680. He got a 680 in less than 30 days. So that's the answer.
That's pretty good.
And if you can get like 2 or 3 of those, 2 or 3 trade lines like that you pay for, mm-hmm. your score is going to jump up very fast.
With the trade lines?
With the trade lines, because they're basically credit cards, but they're not going to mail you a credit card. Right. That helps you keep the utilization low. That's a good way to get your score up. more than 100 points if you want to within 3 days.
What point did you walk away from a deal? Like you went to the table, you purchased it. What point did you just say, you know what, this isn't going the way I wanted to go? Before I get in too deep, I'm done, and you pull out.
As me as the buyer, or as me as the lender?
No, both. Buyer first and then the lender.
The one in Baltimore.
Okay.
We walked away from it. We ended up prosecuting him. He went to jail and everything for stealing our money.
Oh my God.
I could have been stubborn. I was about to, but my partner was like, Afia, just walk away.
Right.
I was gonna, because I realized, I realized that he cheated me, and I realized that he sent me to a contractor that he knew was stealing my money. So they were both stealing my money. Right. The lender and him were stealing my money.
I would have went after him.
I did go after him. I went after him and prosecuted him, and he got arrested, and he has restitution and all that. But you're not going to get your money.
Right.
So I walked away from that one. I just gave the house back to the lender, so I didn't owe them any money. They ended up, this is going to be a part 2 for that. They ended up still coming after me, even though we signed a contract and I gave it back to them.
What was the red flags you started seeing with this guy though? Just, what was
having an attitude with me about my money.
About your money.
And having an attitude with my partner, my business partner, when we question them about how much did you pay for this? Give me the receipt for that.
That's sign, you know, somebody not doing it right. When they get mad over you asking them questions because they can't answer.
Because you can't answer the questions, and I'm calling you to the fire. So that was the red flag. And then when going to the property and seeing empty alcohol bottles, I was like, y'all are in here having a party and not even doing the work. So that was a red flag as well. But I did walk away from that deal. I didn't like it, but I
so your profile says $50 to $100 million deals. What were your role in those deals? And it says U.S. and Ghana. So what role did you play? Were you instrumental in like helping the investors get funding, or were you actually a part of the JV venture developing?
Yeah. Too. So, that's a great question. So the $50 million is a joint venture deal. That's for people that are scaling up their businesses. That's for people that know that I want to build an empire. We give you $50 million as a joint venture. So I get it from the equity partners. So there's billionaires that just put their money into a bucket, and then they look at deals as they come along. My role is to structure it. My role is to make you look good. My role is to tell you what to put in, what not to put in order to get that particular deal. With the same investor, we can do up to 100 million. That's the big boy. That's the deal that we are going to be doing ourselves in Ghana.
So kind of explain your role, like how you orchestrating it, like who's bringing the money, who's getting the land, how is it coming together, how's it closing?
Okay. So when it comes to the development deals in Ghana, first of all, I'm part of a royal family in Ghana. So I'm a queen mother in the Ashanti region.
Okay.
What does that mean to you as an investor? That means I have political ties. That means I have ties to the royal family. I have land that was willed to me by my father, may he rest in peace, years ago. Land that you can't even pay. It's millions of dollars right now if I wanted to sell it.
I'm hearing more of this.
Yeah. So my job would be to acquire the land. So with ODG Developments, my brother, Jay, he's a licensed architect. He was trained in
the family for you.
It's a family business.
Since the beginning of time, your father flipping it in Florida State at 18. So this is nothing new to you.
Yeah.
You're very experienced.
Yes.
Okay.
In real estate and flipping and development. So with the development, we own the land already. So there's no risk to the people who are going to be buying from us because we own the land already. It's already vetted. We developed the property. I actually sent you a video of a hotel that we did, Casa Grande in Ghana. They can look that up. That is a ODG development. We do the project. So we do it from the ground up, from the dirt to the actual structure. ODG development handles all of that. I come in when it comes to the financing.
Right.
We have financing where there's a company here in America, because my office is in Columbia, Maryland. So they can come here to my office, get money to buy the house in Ghana. That's huge.
Okay.
It took 25 years.
That was my next question. My next question is actually, where is the money coming from? Is it coming from U.S. institutions? Is it coming from individual private investors? Like, where's the money come from? That was my next question. So I want you to kind of hit on that again.
Segueing into that, there is a U.S. company that will lend what we call diasporans.
Okay.
You're a diasporan. I'm a diasporan. Anybody who is outside of Ghana is a diasporan. They will lend you money to buy a house in Africa.
Just
In
after
Ghana.
period. Oh, in Ghana.
And I only secured Ghana.
Okay.
Yeah, I can't talk about the other countries, but I secured them to lend us money in Ghana. So you'll get a regular loan.
Say that one more time. So you're an American company, American person, and you can invest in Ghana right now.
You can invest in Ghana right now.
Wow, that's
Through a lender over here.
That's amazing.
It'll work the same way that it works for you to buy a property over here. But the great difference is the ROI, your rate of return on your investment, is 10.5% to 12%.
Well, what percentage is typically like foreign versus local?
Well, over here, when I do my flips over here, maybe I make it a 3% return on my investment.
Okay.
If I flip it and I sell it. So several types of flips. You can buy a property, fix it up, flip it. By selling it to somebody, I grab all my money and I leave. Or I can buy the property, fix it up, retain it, and rent it out.
It's passive income.
Passive income that I'm getting every single month. So with the developments in Ghana that I love so much, and when they look up Casa Grande in Ghana, she bought the property. I think she paid us about, it was in the millions to develop her property. It was very expensive, but she retained it. She's 100% occupied.
That's smart.
She can rent her place for anywhere from $300 to $1,500 a night.
In Ghana?
Keon, I said a night.
A night.
A night.
Wow.
Depending on when you're traveling. During December, everybody heard about during December.
Mm-hmm.
During December, you can charge people rent anywhere from $300 to $400 a night. You can go up, if you even look at hotels.com, there was somebody charging
$1,400 and Christmas?
Christmas time.
Okay.
But the great thing about Ghana is that when you have an investment property over there, you make money year round.
Man, I've been here. They got that, kind of like the Coachella.
Coachella, they have Ghana. Everybody. So if you're an investor and you have a property, you're making so much bank on your money. And with ODG, I decided to do a second wing called Gold Coast Management. So we're not just going to let you buy the property and just tell you to go on your own. We'll manage the property for you to get people in your property, Airbnb, and give you the money every single month.
Okay. So if a regular investor wanted to invest in Ghana, realistically, what's the minimum that he would have to? Don't you know Hollywood stuff? I'm talking about for a regular investor now.
Okay.
A regular investor, how much money would they have to, what's the minimum to get the money lady involved?
You have to do, so my property is Legacy Suites, for example. It's a condo style property, 3 floors, 5 minutes away from the
condo, 3 floors?
3 floors.
Oh.
In Ghana. It's 5 minutes away from the beach. It starts off only at $140,000. That's cheap for 1 bedroom.
For 3 levels though?
2 bedroom. So you're buying a condo. So you're getting a 1 bedroom, 2 bedroom, 3 bedroom. We also have a 5 bedroom, house. It's a townhouse. You guys call it townhouse here.
Right.
Over there we call it a duplex.
A duplex.
4 levels, finished basement, elevator in the house, and a pool. Guess how much that is?
200.
$375,000.
375. You can't beat that.
You can't beat. You can't. It's like, oh my God.
It's $1 million over here or more.
So we're gonna keep that. Any development that we do as a family, we keep a unit so we can rent it out. I can rent those units for $1,000 a night. Sometimes, sometimes $400. Just depends.
If I'm hearing you correctly, you can pretty much invest over there for as low as 140 grand.
Correct.
140.
Dealing with ODG, 140 grand. We have properties that you can get. Those are the condos. If you want a single family, if you want something bigger, because you have a big family, we have that too, which is I was telling the 5 bedroom, 5.5 bath.
So would you think is that the lowest? Maybe the 140? Is that on the lowest?
That's on the low end. I would be wary of anything cheaper. And I always tell people, when you go to Africa, period, don't go online and look for land and houses. They're going to cheat you out of your money. They're going to take your money and you're going to go back.
So what's the most efficient way to look for it?
You got to go through a developer. That's why I made ODG Developments, because I knew I was going to pivot to Ghana.
Mm-hmm.
And I knew that people, the year of return where they were giving away free land, they're not giving away free land anymore. But with ODG Developments, we'll throw the land in there for you if you want us to develop your property on our property.
We got it.
So we're going to incentivize you to come to the money.
Kind of like scratch all that, we scratch your back. And then
everything is reciprocity.
Yeah, that makes sense.
If I can't make money with you and we can't make money together, what are we doing? So that's the way that we think when it comes to the development side. So financing from here in America to invest back home.
What are 3 loan strategies people is not talking about right now?
DSCR loans. When it comes to loans in America, DSCR loan is a debt ratio loan. That's the old stated loan. Back in the day, when they did the stated loans where you don't have to show me your income, you can just tell me I'm a doctor. I make $300,000 a year.
Oh no,
I'll say, okay.
They not doing that.
No. This DSCR loan, you don't have to show me your income.
Oh, so it's kind of like repeating history.
It's repeating history.
Oh wow.
That loan is for investors. That loan is for somebody like me and you
Investors.
that were self-employed.
Gotcha.
I mean, I may make a lot of money, but I'm not going to report all that to Uncle Sam. Right. So I'm going to give you a DSCR loan. You don't have to show me your income. You have to have a legitimate company that I can go online and see that you're in good standing, that you had the company for at least 2 years, and I can give you an investment property loan, and all you have to put down is 20%.
So that is like a good kept secret almost. Like
a lot of people don't know about that.
So if they knew better, they would do better. They would do that.
They got to contact the money lady. I know the ins and outs of it. That's why I always talk.
I've never heard of that loan.
It's a DSCR. In the old terms, it's called no doc.
No doc loan.
You're actually
I'm familiar with that. No doc.
It's a no doc loan, but you prove your assets.
Right.
If you're buying a house, you need to put 20% down.
No, it's okay. Now that you say a no doc loan, there are some lenders doing that.
Yep.
You got a little collateral though.
Yeah. I mean, you put money down. You put 20% down.
Yeah.
Right. So
okay.
if you don't
that's another good one. Just wait more. Give me one more.
Bank statement loans.
Bank statement loans. Explain that.
6 months or 12 months bank statement. So if I'm self-employed and I get all my money through my bank, let's say I do hair. Hairdressers make a lot of money.
I heard.
Cash apps, $100, $50
tips, all that.
Tips, right? Mm-hmm. So instead of you giving me your paycheck stubs because you don't have them, you give me 12 months bank statements. What do I do with that? I take your deposits and your withdrawals. I divide that by 12. That's your monthly payment. A lot of people don't know that. So when they're self-employed, they don't think they can get a loan. You can refinance with that. I'm doing loans right now where I'm giving people cash out of their property. They're self-employed. They can go bank statements. They can go no doc.
So why are these now widely known? Because they don't know the money.
And they don't know the right questions to ask. And I always tell people, please don't listen to your friends and family. You know, you used to play football. I'm not going to go ask somebody else about how to run a play and the different stuff on the court, on the field. I'm not going to ask somebody that's never played football.
Right.
Would that make sense?
Not at all.
So I need to ask somebody that has done it so I can tell you how to get around it. I love the fact that with my clients, I'm from Ghana. I love doing things the African way. Whatever way it takes to get you in the property legally, correctly, I know what to tell the underwriter. I know what to not tell them.
Right.
You give me a bank statement that has NSFs. Don't give me that statement. Let's wait till next month. Don't have any NSFs. So I know how to manipulate the situation in order to get the job done, which is the end result. Getting that piece of real estate, building a legacy for your family, right?
Right.
Buying a house and okay, this is your house. You know, this is your property now.
Yeah. No, you know the ins and outs. Like you're doing it for a long time. Very experienced. I get it.
Absolutely.
What would you say the biggest misconception is about people getting loans?
You have to have great credit. You have to have a lot of money saved. Literally, I closed the deal, I think, 4 or 5 days ago. I think her investment was $500, which was the appraisal.
Okay.
I gave her the money for the down payment. The seller gave her 6% closing cost help, right?
That's big right there, man.
So that's what we're going to do for everybody that comes through your program.
Absolutely. Yeah, absolutely. I think
that's what we're going to do.
The biggest misconceptions is credit for what?
Right.
Credit and
all you need is a 580.
Thinking that I know, and people thinking they don't make enough.
Right.
Thinking they don't make enough money.
Right.
But I've seen, through the program, I've seen all different type of situations.
Exactly.
People with low income, but they make good money. So they're able to leverage stuff off, you know what I mean?
Exactly. I had a spouse on. I did a loan where the husband was on the loan, but the wife made money too. So the underwriter was going to deny the loan because the debt to income ratio was too high. I asked the question. I said, well, the wife makes money. Can I show you her paycheck stubs?
Right.
Can she write a letter saying that I'm not on the loan, but I'm going to contribute?
It's always illegal.
It's always a way around it. And the lender, and another misconception, that the lender doesn't want to give me the loan. The lender's discriminating. No, the lender wants all your money. The lender wants all your money. And the lender is going to benefit from the loan.
Yeah.
More.
We talked about that earlier.
More than you if you don't know how to navigate the situation.
It wasn't just the bare truth that people find out later about this whole process. That they pretty much could have got approved if they would have just tried.
It's easy. It's easy if you go through the right person that has your best interest in mind, which is the goal of home ownership.
Right.
If I were to be like a lot of my other competitors, a lot of people wouldn't get loans. Most of the people that I deal with are the first generation of people that ever bought houses in the history of their family.
Wow.
Because I take the tough deals, even though they're very exhausting, but I take the tough deals because I believe that everybody deserves the so-called American dream, the house and the opportunity. And then I educate my borrowers to get mentally, psychologically ready for this journey. I always tell people buying a house is like a pregnancy and how long it takes. It doesn't take that long, but you go through certain things within that pregnancy, fixing your credit, making sure your income is right, making sure your assets are right. And then the birth is the closing. So if we're on the same page as my borrower with me, that we're locked in, that we're going to get this house by any means necessary,
It's going to happen.
it's going to happen. You manifest it, it's going to happen.
So if somebody is really serious about building wealth in real estate, what would you suggest? What would you tell them to stop doing like right now? If you're serious about investing, what would you tell them to stop doing?
Stop procrastinating and listening to people that are not in the position that you want to be in. If I'm just listening to people that don't have houses, they're renting, they have no ambition to own, you got to take yourself out of that scenario so your mindset can change. And then don't overspend. When you get your taxes, don't go buy new furniture. Don't go buy brand new everything in the house. Save that money as an asset. Even though I'm going to give you the money for the down payment.
So what else do they need to do though to get themselves in position?
Credit and income.